Hello, good day, and welcome to Liquidity. So, today we're going to be starting week one of our 4 week trading program. Now, the idea is that we're going to be taking you from zero knowledge to advanced knowledge. We are not leaving you in between, we are not dropping you by the wayside. We are taking you from being a complete, absolute beginner trading Forex to an actual Forex trader. Yes, but all of these is going to be dependent on your willingness to learn, your willingness to follow through with our process, your willingness to be self disciplined, the willingness to keep your heart and your mind in check and following us. Well, all you need to do to get started is one. Okay, yeah. Before going into the tools and the things you need to get started, let's talk about what um, a forex trader is. So let's go. Who is a forex trader? Okay, simple and short, a forex trader anticipates the change in currency prices and take trading positions in currency pairs on the foreign exchange market to profit from a change in currency demand. Keyword profit. Note, this is not too complex. Forget what most people tell you on YouTube and what you hear here and there that Forex is difficult, it is risky, it is this, it is that. You understand that you get those kind of fearful ideas. Keep those things away. Fear is your enemy. Yeah, so whatever you've heard before now is probably wrong, and I'm going to be giving you more details on that. When we get into risk management and psychology, you understand how some people came by their conclusion that one, forex is a scam, or two, you lose your money trading forex. Yes, there's bound to be losses. I mean, every business has its risk involved. Some of you paid 50K, 55K, 60K for X partner and ended up without making a single sale. You get, I've met people like that. I know people like that. Do you get? So yeah. So that's digital marketing. Or so you see that there's risk in everything. Yeah. So yeah, some people go to school for years. I mean, your nursery school, your primary school, your secondary school, your university. That's about 20 to 25 years of education, of schooling, of spending money on books and everything in between, and they still end up without a job. That in itself is a risk. But you get your parents, or your guardian, or you yourself, if you trained yourself, you took that risk, uh, yes, for a change, for a better tomorrow. Yeah. So, well, moving forward, we've established what forex traders are. Now, what is forex trading? It's the act or the process of analyzing these changes in currency prices. Now, a simple intro to forex trading would be look at the naira versus the dollar price. Yeah, for example, in 20, what year did Buhari enter self? 2016. Yeah, 2016. Was it 2016? Sorry, 2015 election. Yeah, around that time, I remember the dollar was like 230 because my father had to convert some dollars, and it was $1,000 then or thereabout, and the rate was, I think, was it $1,000 or $10,000? I can't even really remember, and the rate they were giving him then was 230. Now that means that he would have gotten 230,000 naira. Now, yeah, but fast forward to today. Now that's today. That's the 28th of January 2022. Sorry, 2023 rather. Let's look up the price of naira to dollar. So dollar to Naira. Aboki. Aboki FX. Okay. Now in this place in Aboki FX now they are showing you the black market price. So that's today in sorry the bank price. So that's today on bank rates we are seeing so as at today on bank rates rather we'll be seeing like um block we'll be seeing 4 something 5 something like that. See, look at where my stuff is. NGN USD 458. Now parallel markets. Okay, parallel markets is not showing here, so let's just go back to black markets. 743. That's as at Monday, the 9th of January 2023, 743. So looking at this as a case study, you see that the Naira has increased. Sorry, the Naira has fallen in value. So the dollar has increased in value between then and now by, so as people would say in Lagos, dollar Timon. So the dollar increased in value by 500 naira. So that means people that bought it that had $1,000 then in 2015 that was going to be 230,000 naira. Then that same $1,000 now in 2023, 8 years later, is about 743 naira. So that's like a 513 naira increase. Now, that's in the space of 8 years. But in the forex market, in the trading market, these things happen on a daily basis, in seconds, in minutes, in hours. Hey, God, H factor. In hours, it happens over and over again. Do you get? Now, how do we monitor how do we monitor the change in these prices between like naira and dollar, between naira and pounds, between dollar and pounds, between pounds and euro? We do that through what we call chatting softwares. A chatting software, an example of a chatting software is TradingView. Other chatting softwares are MetaTrader, but I prefer to use TradingView. I pay for my TradingView, but I pay for my TradingView. I pay premium, but there's a free package as well. So I encourage you to get the free package. I'll post a link in the description of the video on how you can get a free TradingView account. Yeah, so just click the link, create your TradingView account, and you're good to go. So just check the description box for that. So so let's check the dollar and naira stuff between then and now. So Forex, NGN USD. So this is a Nigerian naira chart to the US dollar chart. And from these charts we can check and see the trend. The trend means the way um, the dollar has been changing. You get the way it has been varying with the naira over these years. So now from this is a daily chart. So every bar you see here represents one day. Every bar you see here represents one day. So on this day in particular, that's the 30th of March 2020. The price of naira fell from um okay, let me invert. Okay, so on this day in particular, the price of the naira fell drastically. Yeah, it fell very drastically. Where's this? Okay, yeah. So on this day, the prices fell so bad from now, taking it back to 2015. See the decline. See, this was the steady state kind of for a few days in 2015, and as you can see, this was 2013. So it has been declining since 2013 to 2014. Around here was like 160-ish. Then it came down to like 230 something to 20. Then it dropped on this day in particular. That was 20th of June 2016. It dropped. And this was when the present administration came in. So since then, it has been dropping. It has been dropping up till this day. So this is a chart, for example, of the NGN USD, that's the Naira to dollar. But in this case, we don't really trade things like this because we can't really analyze these kind of currencies. You get these are the kind of currencies that you trade on fundamentals purely. But I'm going to explain what fundamentals is to you later. So we're going to be talking about fundamentals. We're going to be talking about technical trading and sentimental trading as well. So, well, let's go to a currency that's tradable. So we're going to check in this currency out now. That's Euro USD. So it's the merging of the um, Euro. That's the Euro. That's the currency used in Europe against the US dollar. So you can see now compared to this um, NGN chart you were seeing a few seconds back. Look at Euro now. This one seems to have some kind of patterns, some kind of repetitions you get. So, for example, it will come down, it will go up, it will come down, it will go up, it will come down, it will go up, come down, it will go up, it will come down again. Sure about that. It will come down again, it will go up, it will come down, it will go up, like that. You get. So now, based on these things, we can analyze these charts. We can look somewhere on this chart and say that okay, oh, here in this chart, I'm going to sell. If you reach this level, I'm going to buy. Now, as you're selling and as you're buying, you are making profits in both ways. As long as your analysis is right and your analysis goes through. So the analysis is basically your projection. Like, okay, so if you feel like um, um, euro is going to fall, you sell your USD, and you believe dollar rise, you sell your USD. If you feel like euro is going to rise and dollar will fall, you buy euro USD. So when you see um, euro USD like this, euro is like the currency on top of the USD. That's the second currency is below. Yeah, so as the currency on top is increasing, like this place now between here and here, this means that the euro gained more value over the dollar between this day, that's between 27th of September 2022 and today. Today is Saturday, the market is closed. The euro has been gaining ground somehow against the dollar. But before then, the euro has been falling. There was even a time where 1 euro was equal to $1. This was around the time. So this was the time when the dollar became stronger than the euro. I know that before now, as Nigerians, we know that the pound is the strongest, followed by euro, then dollar. uh If you are converting the power of the currency to the naira. So now this place at this right hand side is your currency. It's the present price, it's the price range of the currency. So, and on your down part here is the time, the present time. So now I believe I introduced you to what Forex charting is all about. Now there's something called time frames. So in each of these candlestick, oh yeah, let's talk about candlestick. So a candlestick is like the units of measurement in Forex. So it's just like how will I put it? It's like your ruler. Yes, like your ruler. So you or yeah, like your ruler, your measuring cup, anything, any kind of any way you feel, any kind of measuring instrument or tool, this is what the candlestick is in forex trading. So here with us is the candlestick. Now, candlesticks come in different sizes and they are measured against time. So in this day now, for example, this day you can see where my arrow is. That's Friday, 4th of November 2022. On this day, you see the candlestick here was bigger than the candlestick on Thursday, the 3rd of November 2022. That means the that means on this Friday, 5th of November, sorry, 4th of November 2022 rather, much more changes happened all or all across that day than the amount of change that happened on Thursday in the same currency. You get? So on this top side now, you can see the dates ranges. So you can decide to look at your chart from the aspect of the monthly time frame, or the monthly time frame, from the weekly time frame, from the daily time frame, from the 4 hours time frame, from the hourly time frame. So now note, you remember on the daily time frame, 1 hour is equal to one candle, one candlestick. Sorry, on the daily frame, sorry about that. On the daily time frame, one candlestick is equal to 1 day. But now on the 1 hour time frame, one candle is equal to 1 hour. So this was the candle that opened around 4 p.m. on the 26th of January 2023. So between 4 and 5 was this candle. The next candle was between 5 and 6. The next candle was between 6 and 7. The candle after that was between 7 and 8 p.m. on that beautiful day, which was the 26th of January 2023. So that's about forex time frame. So a time frame is just a period in time, or it's just like the lens you want to look through stuff with. So just like when you're looking at a map or when you're watching something, you're looking at a picture and you want to zoom inside. So when you want to zoom, you want to expand to see the smaller parts that you are not able to see in the normal picture. So if you want to do that, you go into a lower time frame to zoom into the chart. But if you want to so if you want to zoom out of the chart, so you want to see the bigger picture, you go to the bigger time frames. That's the daily, the weekly, the monthly, and like that. Now, there's something that's called top-down analysis. Top-down analysis means do your analysis from higher time frames to lower time frames. So for some people, they'll look at the daily time frame, they will mark their zone, they'll do the analysis, they'll now come down to like 4 hours time frame to do the analysis. You know that a day is 24 hours. So, and this 4 hour time frame, that means there are there are 6 of these 4 hour time frames in one day, one daily time frame, and there are 24 hours in a day. So, if you go to the 1 hour time frame now, 24 24 of these candles will make up one daily candle. Yeah. Then so now after looking at candlesticks as a unit of measurement, I just want to tell you about the types of analysis. So this kind of analysis that we are doing now, where we have to look at a chart and mark points, mark zones. For example, okay, this is my personal chart and these are my marked up zones. This was yesterday. Yesterday was Friday, and this was my trade for Friday. This was the risk reward of 1 to 5. I entered from here, took my profit here, stop loss was right above there. Yeah, so now this kind of analysis, this kind of trading I do is called technical trading, where you have to do analysis and things like that. Then there's now the one that is called fundamental trading here. So now fundamental traders trade news. They trade news events. They watch TV, their websites that post all these news events. So they look at these news events and decide if they should buy or they should sell. Do you get? But for me personally, I'm a technical trader. I do my technical analysis. I analyze my charts and I trade. And when there's a news event, I leave the market just to be safe because these news events are usually volatile. The market can move very fast during a news event, and if you are not careful, you can lose money. So you see, this is another reason why people lose money trading forex because sometimes they trade during the news without knowing that they are trading during the news. So when you're trading during the news, there's a lot more exposure, and you get mistakes can be made, errors can happen, there can be slippage, a lot of things like that that will make or result in you losing your account. So if you take all of these certain precautions, that's not trading the news, if you are not a fundamental trader, keeping your psychology right and proper risk management, you are going to be fine trading forex. Now, to trade news events, this is Forex Factory. Forex Factory is somewhere you can check. So before you enter a trade safe, go to Forex Factory and check. You can get the app for Forex Factory on Android and also on iOS. So when you go on the app and all of other places, you'd be able to make changes here to pick the currencies you trade. So if you trade Euro USD, for example, you need to look out for news that affects Euro, that's EUR, and news that affects USD, that's the dollar. But if you trade dollar versus the Japanese yen, that's JPY, you will need to check news that concern JPY and news that concern USD as well. So now when you see the news on that day, so now when you see the news on that day, you now check the color of the bar. If the color is red, around that time, close. So for example, on 27th of February, sorry, 27th of January, rather, which was a Friday, the news event was red by, yeah, like deep orange to red. See, high impact expected here, low impact expected. So low impact you can just fashy and not stress. But when you see high impact news like this, my brother, my sister, run. So this is 8:30 a.m. and this time was not Nigerian time. This time was um, American time. So when you open Forex Factory, for example, you come to this top right here. You pick the time, West African time, and save settings. It's now synchronized. Blah 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 blah. So now we are using West African time. You saw what I did, right? I came to this top, I clicked on it, and I clicked the time stuff. So now you get I clicked on this and West African time, GMT plus one, save settings. Then to go to when you're in Forex Factory main page, just click on calendar. Now, so next week now, the all the news events on Monday, by Monday, all these news events will update. So this January 23rd will change to January 30th. So now that means the time has corrected. So this news event on this day was by 2:30 p.m. on Friday yesterday. That means let's say by like 2 o'clock, any trade you have running on USD, maybe UR USD, GBP, USD, USD, JPY, anything, just close it to be on the safe side. Or if you want to risk it, well, you get it fine, but it's your risk as well. So, like I said, this is one other reason why people lose money trading Forex because they do not take things like this into consideration. Then investing.com is another website where you can check for news events. So with investing.com, when you get the to the um, home page, when you get to the home page of investing.com, you can just decide to explore the different tabs and you get like these things. Some of these things are things that you are going to explore by yourself, you're going to learn by yourself and like that. So you can check my watch list, you can add things there. I'm going to teach you a strategy later on that is you're going to need investing.com for, and you're also going to need CNBC. Okay, I didn't save CNBC here, but yeah, CNBC. You're going to need CNBC for some things I'm going to teach you and show you later on. But well, for now, so investing.com, you go to tools, you click on economic calendar, and it is basically like how it is there on Forex Factory. Well, so you do your settings, you save your stuff, and you are good to go. Don't forget to create an account with them, sign up with them. That sign up with investing.com, sign up with CNBC, and sign up with Forex Factory and get their app as well. Well, get their apps as well. I'll mostly encourage you to go for investing.com anyways. So that's it about fundamentals trading. I'm not going to be teaching fundamentals trading right now, but later on I'm going to get into fundamentals trading. I'm going to teach you fundamentals trading, but it's not within these 4 weeks. And don't worry, I'm not going to ask you to pay for that either. I'm just not a fundamental trader yet. It's something I'm looking at, but I mean, I make enough trading my normal technical analysis and trading just one currency pair. So that's just secondary. Anyways, so I've spoken about fundamental, I've spoken about technical. Then there's now the one that's called sentimental analysis. So sentimental analysis is when you look at the opinion of others before making your own decision. So, for example, you hear that um, Joe USD is bullish, then you decide to go bullish because you hear, or you get, it doesn't really need like a lot of thoughts to go into it. It doesn't need a lot of thoughts. It doesn't need a lot of processes. You don't need too many. You understand what I'm saying, Sha? Yeah, to get into sentimental trading. So I don't trade sentiments like that. I just run my stuff, technical analysis, and I'm good. And it will interest you to know that I just look at my chart for like 20 minutes in a day. Yeah, most times I'm in class. So by like 9 o'clock or like 8:40, 8:55 rather, I've opened my chart. I'll look at what I'm looking for. Yeah, now set my pending order, and by like 9:30 or 10 or 10:30, my order would have triggered, and within 1 hour, I've made my profit and I've left the market. So that makes me a day trader. Now there are different categories of traders. There's this place here. No, it's not. God, where's it? Where is Oh, okay. Yeah, this is what I was looking for. So there are different types of traders. There are different types of traders. There's the scalper. So scalpers trade majorly on 1 minute time frame of to 5 minutes time frame and thereabout. You just open it sharp, sharp. They'll make a few pips and they'll leave. Then there are day traders, which is me. I swing between scalping and day trader, but I'm mostly day trader. Day traders trade every day and they try to find opportunities in the market every day and they just trade, they leave and go. Most times they don't carry their trades overnight, and even if they carry it overnight, it's mostly just going to stay with them for like one night, and by the next day they'll close the trade and they'll be done. Now swing traders are in the market for a long time. I have a friend that swings, a few people actually that swing trade. So when you are swing trading, you enter the market and you can stay in the market for 1 week, 2 weeks, 3 days, 4 days, 5 days. I don't mean like you will see and be looking at the market too, but when you buy a thing, for example, let's say Euro USD, swing traders will swing. This was here. This was Wednesday, 18th of January, Shibi. Now, a swing trader can swing their own trade from this Wednesday to that 18th of January to yesterday. That's Friday, that was 27th of January. That's 9 days. Swing traders can hold their trades for this long, for this entire period of time. Uh-huh. Now, a day trader is just going to hold their own trade for a short time. So maybe from that um, Wednesday, 18th of January to maybe that same Wednesday, 18th of January. So they cannot hold their trade from that 8 a.m. So from that 3 a.m. like that and hold it till maybe 11 a.m. and they're done. You get over it exactly. So that's how like day trading is. Then scalpers just scalp small, maybe just enter the market and sharp within like 5, 10, 15 minutes. They have closed the trade and they are out with their profit or their loss, whichever case it is. You get, I'm not sugarcoating it and I'm going to make it seem like people, nobody makes losses. People do make losses here. But like I said, it's a matter of perspective. Don't allow the fear don't allow the fear of the losses to rule your mindset. Yeah. So then there are position traders. You know that thing I showed you before on the daily time frame for for months. For months. So some position traders will hold their own trade from here. This was 27th of January 2022. They could have held this trade from 27th of January 2022. They hold for like months. They can hold it. They could have held it till like maybe July or maybe this October 2022 or maybe December. You get, or maybe till this January of 2023. You get, so that's what position trading is all about. Also in this context. Okay, so moving on. For the Forex market is open. Okay, yeah, I was meant to talk about pips. So, because I mentioned pips, so I don't want to go too far before talking about pips. So, a pip is the smallest. Okay, let's not say smallest. Is a unit of measurement. Remember, I said candlestick is the measuring tool. It's like a gauge, it's like the ruler to measure. Now, a pip is the unit of measurement. So the smallest movement in the market is like one pipette. Then pip is when you move from like, okay, let me go to a smaller time frame so you can see it well. Let me go to the 1 hour time frame. Sorry, 1 minute time frame. So sorry about that. So on this 1 minute time frame, this is a pip. This is a pip. Remember, the lower you go into the time frames, the smaller the this thing gets, the chart gets, and the higher you go inside, that's the outer you come, the bigger the this thing gets. So here now, between this is one pip, between this point here, there is this point here, there is 1.08661.
1.0660 and 1.08670. Here is 1 pip. You get, so it's just like saying that is 1 centimeter or 1 millimeter or one gram, something like that. Yeah, so that's how we gauge things. So for example, if I tell you that I made 10 pips, if I tell you that I made 10 pips in Euro USD, this is what I'm trying to tell you, that I made a trade that moved from okay, that moved from 725 to 625. It's me telling you that I took a trade that moved from here to here. This now is 10 pips on the 1 minute time frame. Do you get? So it's like the units. So most scalpers mostly just enter the market for like 10 pips or 15 pips or 20 pips and they are out. They are gone and maybe they are done for the day. Day traders can take between 20 and 30 pips or 40, 50 pips thereabout. Swing traders always like to get like 100 pips, 200 pips, 250 pips. Position traders hold their positions for like thousands of pips, and you get, yeah. So I hope you understand. I wish this was a live call and you could ask me questions directly, but since that's not the case, we move now down to um, the next part I have for you is time, forex timing. Now, the Forex market is open 5 days a week. Monday, Tuesday, Wednesday, Thursday, Friday, Saturday and Sunday. Everybody they go their papa house, go rest. You get, or their mama house, go rest. So trading sessions. You should install this app, Trading Hour, on your device if you there's an app like this, Trading Hours, on your device if you use an Android on iOS device. So well, let's go for Forex trading sessions. Now, there are four Forex trading sessions. There's the seeding session that opens by 9 p.m. to 6 a.m. UTC. Now, that's like 10 in the night to that's like 10 p.m. in the night to like 6, 7 a.m. in the morning. Sydney session is open and like Tokyo session as well. Sydney, Tokyo. London session opens by like 8 a.m. in the morning every day. So from like 8 a.m. to 5 p.m. we have the London session open in Nigerian time. So now the New York session opens from like 1 p.m. UTC to blah blah blah. So that's equivalent of 2 p.m. Sorry, that's it 2 p.m. Um, 2 p.m. Yeah, Nigerian time to like 11 or 10 p.m. Nigerian time as well. You get, so this is how the market cycle works. So you learn most of these things now, for example, on baby pips. So I encourage you to go on babypips.com and learn this stuff. You get, look at it and learn it. I'm trying to make these videos as short as possible so it will not be boring to you. So I look to forex trading sessions, look at the website baby pips, click on it, and you get your content from there. I've explained what time frames are to you when I said that time frame is the the width of time, the range of time that you are looking at. Yeah, daily time frame shows what happened within a day. So on the daily time frame, one candlestick represents one day. Do you get? On the 4 hours time frame, one candlestick represents 4 hours. On the 30 minutes time frame, one candlestick represents 30 minutes of of time. One candle represents 30 minutes of time on the 30-minute time frame. On the 5 minutes time frame, one candle represents 5 minutes of time. Now, on the 1 minute time frame, for example, one candlestick also represents the price change within 1 minute of time. So this was the price change in at 11:57 p.m. So the price change between 11:58 p.m. and 11:59 p.m. So the price change now between 11:59 p.m. and 11 and 12 a.m. Sorry, that's 11:59 p.m. and 12 a.m. on this day. That was the 27th of January 2023. Okay. Now, the next part we'll be talking about is market structure. So, if you've noticed from when we were on this daily time frame and 4 hours time frame, now I'm showing you something about Euro USD and how it has been changing since 20 this thing till now. I showed you something. I said it was high, low, high, came up, came down, came. Now that's what they call market structure. So within this range of time now, the market structure was bearish, and I also mentioned bearish and bullish before. Bearish is when it is going down, like when you are being pain, your head will be down. Bearish is when it is going down, and bullish is when it is pushing forward, when it is going upwards. So look at cows, their cattle, bulls, their heads, their chest, everything is always up. The bully in your secondary school, they are the ones that always had morale and you get to raise their head up and things like that. So basically, that's what it is here. Bearish, bearish, bullish, bearish. Now, overall, this range here was was bearish, bearish, bearish. Do you understand? Anyways, so I'll be showing you. So now this means that for the last since 2008 till 2023, Euro USD has been bearish. So now in market structure, we are not going to talk about higher high and higher low, lower high, lower low. In this case, it is bearish, so it has been coming low. So now the highest part of the low, the highest part of any point is called the high now. And the lowest part is called the low. So let's use text. Let me type high HH. HH is equal to higher high. HL HL is higher low. LL is okay. Let's say LH. Let's do LH first. LH is lower high. LL. Now, what this means to us is that in market structure, these are the 4 points. These are the 4 points we look at: the higher high, the higher low, the lower high, and the lower low. Now I'm going to be pointing them out to you. So let's do it like this. Let me add text. Okay. I'll come here, click on this text and edit it. XP. So yeah, we have, okay, I hope you're looking at the screen so you can learn some functions on trading view. So I'll post this here. I need that as my high. So I'm just going to label that as my high. Template save as. Now, after saving that as my high, this next part for text is going to be my higher low. No, this is going to be my higher low. So save as HL. You get, well now, this low, then he went now. He did not come back to this high. Assuming he broke this high again. So assuming this thing came came up like this, would have said that this is another higher high. Hmm? But it didn't. It couldn't come up there. Now we now name this place now he name this place a lower high. Are you seeing the change? Are you following, just follow the transition? Higher low. Then since this one could not beat the former um high, it now becomes a lower high. So let's set this lower high here. So lower high, save as LH. So like I'm labeling these things because of you, so you can follow the rhythm and the process. But normally, I don't need to label them for myself anymore because it's something I know already at the back of my hand. You get? So then this next point becomes a lower low. Templates, save as LL. Lower low. Why? Because it now became lower than the former higher low. Do you get? So it now becomes a lower low. It became lower than the former higher low. It's lower than the present lower high. So it's a lower low. You get? So just like deep, deeper, deepest. So this one now comes back up now, and it could not still break. It could not still pass this lower high. You get? So now it now becomes another lower high again. It's not the most recent lower high. Now this one comes, does not break this place, does not come below the lower high, and when it tries to go up again, it does not go above the, sorry, it does not come below the lower low, and when it's going up, it does not go above this lower high until it comes back to this point now, and it now comes lower than this lower low. So remember, just like the way the thing happened up here, it becomes the new lower low. Note, this is not a lower high. You get, this is the lower high. This is not the lower high because there's no lower low. So you can't get um, lower high, lower low, lower low.
lower high, you get is lower high, lower low, lower high, lower low, lower high, lower low. You get alternating like that. Then this one now, we clone it again and we bring it here. Now this is the new lower high. In fact, this is the lower low. You get this is lower low, the lowest point. Then now at this point, it still does not go above this point, so this is still a lower high, and does not come below this point at here. Then till it now comes to this point again. Lower low. So the arrow that is moving on your screen. So you are looking at it and you're looking at the right side. So you see that the arrow is here, and under the arrow there are some candles. So that's the new lower low. So let's look at it now from a month, from the weekly point of view. So from the weekly point of view now, we can see high, higher low. Hmm? Now lower high, lower low, lower high, lower low, lower high, lower low. Now in the other case scenario, in this case now, let's assume the thing was going up. Now it would have now been, this would have been the present low. This would have been the present low. So we target as low. Okay, I'm not sure it's so target as low. Target as low. Then it goes high up here. This becomes a high now. So become, in fact, we could have, yeah, becomes a high. Okay, for now, this it's lower low, and this would have been the kept on. It was even from way back here. So let's not just pick it from that point. Let's pick it from way back here. But we can't say anything here. Let's just assume this was the low. This was the low. This would have been the high now at this point. Hmm? Then this will now be the higher low, higher high, higher low, higher high. You get it? Let me label it for ease of your understanding. So this is high, higher low, HL, higher low, higher high. Shavers change. So yeah, higher high. Then from this point, you have the higher low, this point is higher than this point. So this is a new what? Yeah, you guessed it right. This is a new higher high. So then this point now is low, but it's still higher than this point. So it's a new what? A new higher low. Oh God, you're following me. You're following me. You're following me. You're inspiring me right now to keep on pushing. Now, this is a what? Higher high. This is a higher low. This is a higher high. This is a higher low. This is nothing yet. Then this is now lower than this low. This now becomes a what? Yes, you got it. This becomes a lower low. This is a lower high. This is a lower low. This goes above it. These things, when it breaks that point, it's usually called a a break of structure. You get, because this is market structure. Market structure is either like this. Let me use this thing. Market structure is either like this, either like this. You always see the markets either going like this, hmm? Or it's going like this within a range, what they call a range in markets, or it's going like this. Now, from all that we've seen here, remember I told you bullish, bearish, blah blah blah. So now this right here is an uptrend. Hmm? Uptrend. This is a range in markets. This is a downtrend. Okay. So please don't forget. Let me delete all these higher low things so you can see it clearly without any obstruction. Uptrend, range in markets, downtrend. You can call it uptrend, no trend, and downtrend. So if you get me right, this is an uptrend, not an uptrend. This is a range in markets. When you can't clearly tell if it is an uptrend or a downtrend, it is a range in market, and this is a downtrend. I'm doing it based on these lines that I drew right here, not just the. Yeah, so that's that about market structure and all of these things. Now, finally, I'm going to the third section, and the third section is going to detail what you need to get started. Now, what you need to get started is MetaTrader. Yeah, MetaTrader. MetaTrader is a software that enables you to trade within the Forex market, that enables you to communicate to Forex brokers. Now, you don't have direct access to trade just like that. You need to trade through a Forex broker. You need to trade through a Forex broker, and that is why we recommend our Forex broker to you. Yeah. So MetaTrader 4 is a platform. TradingView is a platform as well that I. So yeah, MetaTrader 4 is a platform. TradingView is a charting platform as well that I encourage you to have a look at because of the tools and the functionality that TradingView has. Yeah. Then I advise you and encourage you to create an account with Baby Pips. Please create an account with Baby Pips and go through this stuff. It is not compulsory, it's just for extra knowledge if you're interested in extra knowledge. But I advise you to. Yeah. All you need as well is an open mind to learn, the willingness to learn. There's no process that is straight. You get every journey has its ups and its downs. You get there are times you feel discouraged. There are times you will not have the discipline to wake up and treat. There are times you have there are times you will forget. So you need to set alarms. You need to if you understand what I'm trying to say. Yeah, yeah. Then don't be scared of Forex. Forex is a game of I will not say probabilities, but you just need to win like 7 out of 10 times and you are good. See, there's something that they say only fools doubt proof. Now, there's proof all around you. There's proof in different places. There's proof. You see proof. You find proof in Happy Forex. You find proof in Fair Clips. As Jeff Benson, you find proof in a guy named Q Banks. Let me spell it for you. CUEBANKS. Yeah, there are a lot of people like these that are for 8 years day trader, entrepreneur, currencies, blah blah blah. Now I can say I'm 3 years day trader, so I'm not at his level yet, but soon enough, and yeah, very soon enough, I'll be there. Now, this can be you too. Don't you want a a life where you can easily and without any doubt boast of certain things. No, it's not really boast. Boasting is not the entire idea, but the big idea is comfort. You get that is what I look for. That is what drives me. That is what pushes me. Comfort. Anyways, so we've come to the end of today's session and to the end of everything that I have for you for today. So I'm going to give you an assessment and I'm just going to give you an advice on something to do for the week ahead. Now, for the week ahead, I'll need you to go to your charts, pick five currency pairs. You'll see the currency pairs not be difficult to find. If you do look for Euro NZD, yes, look for Euro NZD. Let me show you the currency pairs and the things that we are look at. Look for look for Euro NZD. Look at Euro NZD, look at USD, look at XAE USD, look at Euro USD, look at all this, any of these ones, pick five of them. Open the charts, open 3 different time frames and mark out higher highs, higher lows, lower highs, lower lows, all around in advance for our next meeting. Now, in the next meeting, this is what we are going to be looking at in the next meeting. In the next meeting, we are going to be looking at institutional order flow, how the Forex market is moved, how it moves. Yeah, Forex routine, Forex daily cycle. Remember I told you that there's room session, there's this session, there's that session. I'm going to explain how they relate to each other, and I'm going to be showing you how you can make profits through this. Now, I'll just before I close this, I'm going to run through um, my last trade for the week, which was the trade I took yesterday, 27th of January. So now, how did I come across this trade? I looked at my zones. That's about the zones I got from my other blocks and my fair value gaps. Those are things you learn in week 3. I marked them out. These were the zones that I picked. These were the 3 zones I was looking at. This, this, and this. Now, remember I told you that by 9 a.m. I'm usually on my chart. Uh, this was around the time I was on my chart. This was to 9. I came, I marked my zones. It took me less than 10 minutes to mark this zone. I marked this zone. I was expecting price to come to either this zone or this zone. Then maybe worst case scenario, this zone to pick my order and go. Now, in the midst of that, I just looked at this other zone here and I marked it, but I didn't really mark it with any seriousness in mind. But now I left and I came back to check the chart later in the day, and this was what the thing did for me. 1 to 5 risk to reward. That means if you as a trader risked $10 on this trade, that's $10 right now, like 7K, you would have made 35K profit from this. That's 1 to 5 risk to reward. That's what 1 to 5 risk to reward means. And this happened within this was 9:50 and hit TP by 10:15. Within 30 minutes, in less than 30 minutes, I was good with my profits for that day. Now, if you make at least 5%, that you risk $10 and you make 50 every day. Let's say you don't even get pure profits every day, and you make it like Monday, Wednesday, Friday, or Monday, Tuesday, Thursday, 3 days a week. That's over 100K there for you in profits. So now the question I still have for you is this: do you think Forex trading is worth your time, your effort, and your energy? Do you think so? Well, for me, it is. For the last 3 years, it's all I've had in mind. Me, I just want to graduate and go to the world and be fine. I've never really given thoughts to the idea of graduating and looking for a job to do. Do you get? Because I have this going for me. You can have this going for you as well if you're a student. If you're a worker, you can have this going for you by the side. I'm not asking you to resign and leave your job and tell your boss bye bye. No. Even if you're a business person, this is something you can do by the side. So remember, get your trading view set up and ready. Trading view. Then create an account with our recommended Forex broker. Yeah, I recommend this guy. So I'll be posting the link below for you as well to create your account. So click on the link, on the recommended link, create your account through our recommended, through our broker link. Click create it through our link. You create it, and by next week we'll be giving you more details on how to go. And please set aside $100, which is around 50K, as at this moment, to um, set up your own account yourself. In my own opinion, I like you to trade with live money from the start, because it's going to help with your psychology. There's a difference between learning how to swim on YouTube. Then imagine you learning how to swim breaststroke, backstroke, front stroke, every kind of stroke on on YouTube. Then and I'll take you to a swimming pool and I'll put you at the 6 feet end or the 3 feet end or the 13 feet end and I tell you to swim. You won't be able to swim. You know, you will sink, you will drown if you've never swam before. So that's the idea of this program, and that is why I recommend and advise you get that amount down and fund it into your account when you trade it. We'll be learning and we'll be doing everything hands on. In week two, from week three and week four, we'll be trading together properly. So I need you to do these things. Remember, the slots are few. I just need like 25 people to be okay for February registration, and in March we'll go again. In April we'll go again. At least till I'm tired of doing all these free mentorship things, then I'll go and rest and focus solely on my own personal trading and my copy trading business and maybe from there. Yeah, so see you at the top anyways, and I hope to hear from you. I hope to receive your assignments. Once you're done with them, please send your assignments to me. Then one more thing, don't assume, please. Don't assume. Don't lie to yourself. It's different when your partner lies to you, when your boyfriend lies to you, when your girlfriend lies to you. It's different when your parents lie to you, when your kids lie to you, when your friends lie to you. But the lie you lie to yourself, the lies you tell to yourself, end up being the worst kind of lies ever. Because, I mean, why would you, as a man and as a woman, lie to yourself that you are fine the way you are? Why would you lie to yourself that you know it already when you don't? So, for this reason, I'll ask you to not assume you know it. Do the assignment, practicalize it, do it. I will reply every single one of you, even if you are 100. I'll reply you within the week. So that's it for today. It's nice to have you here. I'm still your host and your mentor if you choose. And my name is Samuel. Have a nice week ahead and an amazing day at that.